Hello folks, Ellie Little here at TA today. I'm going to be talking about physical resources. It's where the money is. I mean, it's what's happening right now. You can't hardly go wrong. At the same time, you got a lot of risk. And I'm going to show you how to measure your risk as well, because that's something you always have to keep in mind. The only thing you can control in a market, in your trading, is your risk. And so it's important that you be able to A, identify it, and B, make a plan to control it to some degree that you're comfortable with. So I'm going to go over these today, and bear with me here. We got a few charts to look at. Let's start here. I'll pop into, let's just go to uranium. We'll go backwards. So uranium market has been bullish for a long time. And we can see that by just looking at the long-term time frame here. So if I go over here, grab this tool, you can see that this trend, right, if you kind of do a regression there, you're coming back up to the regression line. So, if initially this thing broke out, I've talked about this many times, but I'll quickly go over it. You break out, that's these two breakouts here, these two swing red and green bars. Those breakouts lead to an escalation higher because there was actually no resistance on the left-hand side. And when they broke out on the weekly and the monthly, and that can lead to one of those cases where you just don't come back, you just take off. And that's what happened. And you get up here and topped out around 33 plus. And then it goes to this long grinding, retrace, right? And I went over this many times at the time, but the point was that if you look at this and you throw in a retest regen line, when you were up here at this price point, you had to know that your risk was back to these swing point highs. That was possible. It wasn't, it didn't feel likely at the time, but you had to know that. And if you go back and look at my videos, I actually did videos back there where I told you when it broke down, and I could pull them up, but I'm not going to go through all that right here. I said on the way down, there was places along the way here, and again, I believe it was here. It was time to take money out of this thing and to wait for a better entry. And that better entry finally came here, right, where you did an under-over hammer pickaxe type reversal off of bullish retest regens. Right, that's what you wanted to see, and then it's been up since then, and it's trying to go back to highs. But that was your risk, right? You had to know that your risk was that far. That's a 50% haircut almost, right? 40 plus. That's the kind of risk that you're taking if you just hold it all the way down, right? As a matter of fact, if you bought these breakouts, you lost all your profits. You had zero profits, right? From where you bought after having a 50% return. So it's important, well, not 50, but 40. It's important to realize your risk, and that's true on all these charts. So if we look at these charts now, what's the risk? Well, it's not that much, right? We don't have that much risk here now. We're at, the retest regens are here. And so at this point, you're not risking a lot. What is it doing? It's bullish, right? Came back, did a test. It broke, it didn't hold this one on the retest regen, but it held this one, and now it's trying to regenerate. And if we get up here and we can get over these highs, that's going to be this swing point high, and that's going to allow this thing to gravitate back to the top. You got a retest regen here on Friday. I'm doing this on 12/19 after the market closed. And you can see here that this is going to print a retest regen, and this will turn colors, right? It will no longer be the 0th, it will be the first test back. It's a good looking chart, folks, and if you go over here, it's not extended. This thing can go a long time, and you've got confirmed up to 27.33, so that's right basically up here towards these highs. Let's go to the next one. Gold. Now gold has been on a tremendous run, and if you want to look at your risk here, the risk here is to lose 60% of what you have. Now I realize that's not realistic, you know, at least not right now, but we're talking about a monthly. You know, this is a 5 years worth of data. 5 years from now, can it be back down here? Yeah, it's possible. I mean, I don't know why it would be, but it's possible. So let's go to something more realistic. Is it more realistic that it might get back to this one? That's more realistic. How far down is that? That's 80 points down on a 396. That's a 25% haircut. You've got to assume that's possible. And that changes the way you look at this. And what it does, you know, when you think about the risk of it, is here's a swing point low. If I were to break that swing point low, that would change my trend. And if I change my trend, and you can see how bullish this thing has been, 99%, that would probably be something that was expected. And if we get another one, you know, if you could break there and then you know, head back up again and you get another swing point low print down here, you break it another time, then it's going to be very dangerous, right? Or even if you get down close and you put two congruent ones. But that's to develop. That's not here. That's not now. Right now, this thing's bullish as can be. Top today, 403.30, got to 402.21. It's going to test those tops. Hasn't got there yet, but it's going to try. And it tried over here. It wasn't quite able to get over it. So right now, extremely bullish. Can it come back? Yes. Does it want to retrace pretty soon? Probably, right? That's what these are telling us. It's telling you that you need to be careful, right? And then you look at your risk and your risk. And, you know, these are warning flags. And then you look at your risk. This is how much risk there is. Will it come straight back down there? Very unlikely. Could it break this swing point low? Very likely. That's 30 points down. That's 10%, you know, or a little less, 8%. So that's your risk. Well, let's go to silver. That one's been even crazier. Silver, where's your risk here? Well, first of all, is it ready to come back? Well, actually, it's not as stretched as gold, right? Because it took off a lot later. It's just been on a huge, fast path higher. You're not stretched here. You're not stretched there. This thing could go longer. As a matter of fact, you're just getting the buildup. Now, notice when you get this buildup like this, right? Big spikes in volume, all congruently, you know, located there. And then boom, you pipe back down. Volume shrinks, which is good. And then you head back up, make new highs. Here you are, pushing highs with volume again. What do you expect is going to happen next? Well, you're going to get some sort of a setback here, you know, before you know it. You have to realize that. And either you've got to, you know, trade intraday, or you've got to look at this chart and say, well, there's a gap right in here. Maybe that's where I'm going to sell if it comes back on me. You know, at least partials or something. Or maybe I'm going to, you know, get a spike up and just nip some of it on an intraday type reversal. Whatever your plan is, it doesn't matter. You can have any kind of plan. You just need to know there's risk. And is there risk here? Sure. Is it as bad as gold? No, actually it's not. It's been on a fervent move though, so from that perspective, it would not be crazy to assume that you're going to get some sort of a retrace. When that retrace comes, we'll get more information though. Like when this retrace happened, it wasn't very heavy, right? That told you more than likely this thing's going to, you know, flip back around and go back up again. As a matter of fact, if we go back this day, you know, look at this over here. This is October 20th, which I'm guessing is right in here. Yeah. And so if we look at that, and we look at this dip here, which is this little dip that you see on the weekly, what did it do? Well, it came down, tested, and broke a swing point low. That's what reset this. That's good. That's what you needed probably. I'm guessing, I'd have to go back and look, but I'm guessing that was pretty extended right there. So now you come down, you break a swing point low. What does that do? It creates a retest regen. So you watch that retest regen and you see what happens. And what does it do? It breaks it back over it here. Perfect. That tells you that what had changed to the downside. So like when you broke this retest regen, that told you what was up. It's probably sideways at best, potentially down. When you got back over the retest regen here, right, that told you that what was sideways is now probably up. So when you get that push back into here, what do you want to do? You will probably want to buy it. And then you definitely want to buy it when you go breaking these swing points on this bar. That's the breakout bar that escalates you higher. Again, you got this much risk. Do you want to risk? Well, let's not assume it's going to come there. Let's assume it's going to come to this one maybe. If that's the case, we're talking about 41 again. That's a long way down, percentage-wise. Watch your daily. Use your daily to tell you when you need to take some profits. It's going to give you the same sort of setup that you saw here. Yeah, it's going to be painful. I mean, from here to here doesn't look like much, but that's 5%, more than 5%, 6, 7%. So yeah, it's going to be a little painful, but if you want to ride this long term, you're going to have to be, acceptance of 5, 6%. Matter of fact, pretty soon, I imagine you're going to have to accept 7 to 10% if you want to keep riding it. That's the price you pay. If it comes back this deep, you've got all this support here to buy it though. And more than likely that is going to get bought. Next, platinum, palladium, same sort of thing, folks. I mean, look at these vertical rises. Are we extended? Yes. Warning flag. Boom, 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 right? You got some confirmations up here. Still wants to hit. Well, it hit this one today, 1852. 20's just a little bit farther up, and then all these will be expended. There'll be nothing more. What usually happens after an ABCD completes? Well, you usually take a break. Could that be a retrace? Yeah. Could it be sideways? Yeah. Which one do you think is likely? Well, my guess is a retrace. Where might it retrace to? Probably the swing point high. So you can see here your risk is not huge like it is on some of those other charts we just looked at, even though it went vertical. When it pulls back, you have to expect, more than likely, that retest regen is going to try and regenerate back to the top side. And so that's your risk right now. Not too much. It's something you can deal with. Palladium, same sort of thing. Look at your risk reward here. Not too bad. Matter of fact, this has a lot of pressure to the downside for a long time. Bottomed out. Now it's escalating back up. I've talked about this in other videos because I was asked about it. And that is when you get a push down like this, well, let's talk about the 4 phases of a market, right? This up here, more than likely, was that area there was distribution. Once they got rid of everything they could, you get markdown. After markdown's complete, you get consolidation, accumulation. And then after that's done, what do? You go mark up. That's a perfect scenario there. Eventually, this will get to a point again where they distribute it. Will it be right here? Will it be up here? Well, it's too early probably. It's going to go higher more than likely. Well, it may even get up to here, right? We don't know yet. We'll have to watch the charts and see how it develops. But that's the life cycle as well, since we happen to be there. I think I touched all of them, yeah? Well, copper. I didn't do copper. Copper is slowly making its move. If I just look at it long term over here, it's nice and move. Do you have a lot of risk? Yeah, I mean, the risk is way back down here. If you get over this price point up here, though, the risk is going to be back to this area. So, if it can trade up to here, your risk is going to kind of alleviate itself. Are we stretched? Well, we are short term. And so could we get some sort of a consolidation retrace type thing, break a swing point low? Yeah. Is it going to happen right away? This one's fixing to print as a swing point low tonight. 2, 3, 4, 5, well, Monday. So can it come back right away? Yeah, it can. I don't know if it will, but right now, your risk isn't huge in this. This is not the strongest one like we see elsewhere. But think about it here. The power of the charts is being able to see where your risk is and being able to create a plan to deal with that risk. If you're not doing that, you're not trading correctly. If you're just winging it, that's the wrong move, guys and gals. You gotta have a plan. You always gotta have a plan. How much is my risk? is the risk? How much is it? How am I going to deal with it? That's what you got to do. And hopefully this helps you a little bit towards that. I'd love to hear your comments. If you have suggestions for other videos, drop those in. I'm all ears. I read every comment you put out there. And if you want some follow-up on this, let me know and I'll do that. Have a great one. I'll see you next time.